Welcome to Mana TV and TV5. You are watching Insight with Praveen Puram live from Atlanta. Today, our esteemed guest is Mr. Sudhir Pai. He is talking live from Dallas today. And we have been discussing more in our previous episodes, more on the entrepreneurship. Now, today's topic is a really hot topic, that is tax planning and benefits of real estate. Today we see in US the real estate market is bubble, and we will know more from our show what are the benefits of investing in real estates and also the tax planning. Welcome, Sudhir. Thank you so much for coming on to my show.
Thank you, Praveen, and thank you, Mana TV, for giving me this chance to come on your TV and speak to your, to your listeners and viewers. Good morning.
It's our pleasure, Sudhir. So let me introduce Sudhir. Sudhir is a certified CPA, Certified Public Accountant, licensed in state of Texas and Colorado. A fellow chartered accountant from ICAI, India, a chartered global management accountant and an enrolled agent. Admitted to practice before the internal IRS, Internal Revenue Service. His experience and result-oriented leadership have propelled to a company called My Tax Filer. So Sudhir is, if we talk about Sudhir, he is before entrepreneurship, he was also like us an IT guy. But soon after, in 2008, he started My Tax Filer, seeing the need for the tax filers, for all the NRIs who are living in USA. And today, he has 16 branches across the US, Canada, and also India. He has also a back office in India. And along with that, he has also another company called Tax CFO Franchise, where he is a support and he provides on-demand CFO expertise to early stage startups. So definitely Sudhir's insight on taxes and also the real estate investments, that would be a great vision to us or insight to us. And also Sudhir, recently he started wealth planning, which is really, really important for all of us. And we'll get to know more from Sudhir. So Sudhir, again, welcome to Insight with Praveen Puram. So we all want to know more about tax planning, right? Every NRI want to hear, this is the hot topic, how to save money from our hard-earned money. This particular show, Sudhir, we have started for NRIs, to benefit NRIs. Any topic which is really relevant to the NRIs, I am bringing those particular leaders or thought leaders into this show. So Sudhir, tell us more about your journey and companies to our viewers and audience.
Sure, Praveen, and thank you for all your community support. I have been seeing you personally. We met in Atlanta in 2017 when we started our Alpharetta office, and I have seen you working hard for the community, and thank you for your service, Praveen. So coming to my journey, I started at Infosys in '97 and worked there in India for about 2 years. Then they relocated me to the US, to San Francisco. And in a short span of about 11 years, which was my first job at Infosys and the last job, I was promoted to the CFO of North America. And that's when I decided that, there is a lot more in career that I can do. So I decided to step into entrepreneurship. 2008, I started My Tax Filer, which is today, a company with close to 250 employees, almost 16 locations, as you mentioned, all over the US and India. And then in 2012, we started My Startup CFO, which supports a lot of entrepreneurs in the Bay Area, all the tech CEOs, with the CFO service, accounting, tax, and help them with the entry and exit to their business. And in 2019, I started Legacy Wealth Planner, which is into wealth planning. And the reason we started wealth is one, because tax is a very strategic stuff, but still, it's only once a year or twice a year engagement with clients, whereas wealth is a round the year engagement with clients. And as I've seen myself grow in this country, in this country full of opportunities, in almost 21 years of my career in the US, there are a lot of NRIs in this great country who achieve a lot of success, and planning their wealth becomes very, very important. Right?
Absolutely.
Planning tax is important because you end up paying close anywhere between 37 to 55 cents on a dollar to IRS and states, just the income part of it. Then there is estate tax, there is wealth tax, and there is, wealth tax in India and other countries. People who live in other countries, they may have wealth tax exposure. So tax is certainly a very, very important topic, but wealth is even more important because you have to save what you made and grow that, because today the rate of inflation is so high. The current President Biden is talking about, raising the tax rates on everybody, more so on wealthy individuals. And as we all know, Indians represent the top between 1 and 5% of wealth earners or income earners in the US. A lot of Indians today do fall in that bracket. So there is a very important need for taking care of their tax, their compliance, because of the two countries that get involved with US and India. And lastly, but most importantly, the wealth aspect of it. So that's what is my little journey, Praveen. I still think there is a lot more work to do, like what you have been doing for the community. I'm trying to do my part, and it's fun.
Absolutely. Absolutely, Sudhir. Coming from an employment and, started your entrepreneur journey, and today you have 250 people working for you. That's a great inspiration for all of us. And definitely the topic what you have taken, I see everywhere that you are there in the community with My Tax Filer, and people look for tax filers to learn, because today most of the NRIs, if you see, 70% of the people just go use the software, build it, and come out of it. But truly, they need to know more insight how to, do more planning to save the tax. So before we know more about tax planning today, we will quickly jump into one aspect, right? Today, Biden's administration, and previously we had Trump, right? So during this transition, tell us more about what are the changes in the different tax laws. To your knowledge, what are the different taxes which came into effect in Biden's administration and which needs NRI's attention to take care of their tax planning?
Sure. That's a very important point which people have to read through, because right now it is just the proposed law, but very soon it will be a signed off law, which needs to be followed from the year 2022. So most of the provisions that President Biden is talking about in his $3.5 trillion reconciliation budget is spending that money by raising taxes on the wealthy. And he defines as those who make more than $400,000 of income, of AGI, adjusted gross income, as wealthy people of this country. So those who make less than $400,000 may not really see any tax increase, but those who make more than that certainly will see a big hit. Some of the changes which are very important for individuals to know is the tax rate today. The top tax rate today is 37%, and I'm only talking about federal taxes, not the state taxes, because state taxes could vary from state to state. But federal tax from 37%, President Biden is talking about 39.6%. And this 39.6% applies to income above $400,000. Earlier it to be $600,000. Now it is $400,000. So basically, people who make more than $400,000 of income are going to pay a lot more taxes. The social security tax, which usually gets deducted from paycheck, or from, if they are business owners, when they run their payroll, or when they file their return, called as self-employment taxes. This tax is right now 6.2% on up to $137,000. Okay. This rate is going to go up for those who make more than $400,000. So keep in mind, these people who are in the Silicon Valley, all the IT guys, who get the stock options and stock-based compensation. I am seeing W-2s these days of $400,000, at least, 2 or 3 in 10. And that is because my tax filer does a lot of returns for even, the income earners below $400,000. Because when I started my tax filer, the idea was to create something like a TurboTax for Indians. Because our first idea was taking care of people, making sure that right from the beginning their compliance is clear, right? Whether it is foreign bank account reporting, filing tax returns in India, filing tax returns in US. They have come as a student, filing it the right way. So all of these compliance was what was very important for me when I came out of Infosys. Very soon I realized that compliance is important, but people want to save taxes. That's more important. And that's when we also started wearing our hat of a tax planner, and we are very good at it today. And the third part of tax increase is the long-term capital gains tax. So the current bill that is in front of the Congress talks about a tax rate of 23.8%, which is today's rate, increasing it to either 28% or regular tax of 39.6%. In my opinion, it will be anywhere between 25 and 28%, most probably 25%. And they have also said that any capital gains after September 13th, 2021, meaning few days before, that means they have kept the date as the starting date. Any gains after that date, you would end up paying long-term capital gains tax at a higher rate vis-a-vis what it is right now. Right now, the rate is 20%, 15 and 20%, plus another 3.8%, which is called as the Obamacare tax. Now that's going to change. That 20% can go up to 25% or even higher, depending on what is the final rule, right? Now that's going to have a severe impact on capital gains. Particularly, we have seen a lot of people generating a lot of capital gains sitting at home, during the COVID time, and doing option trading and mark-to-market elections and all of those. So they will get hit, and this may also impact the markets. Now, government has, the Senate and the Democrats have very clearly come out with the date that September 13th onwards only the rate will increase. So that means the stock market may not move that much, but we don't know. Again, this is just a bill. It is not the law yet. It has to go through its cycle, its iterations before the real impact can be known. And on the corporate side, Praveen, there are a lot more changes. Corporate tax rate for a C corporation, right? When a small business owner has 3 types of entity structures, and regular LLC, which is taxed as a partnership, then you have an S corp, then you have a C corp. Now, C corps, the tax rate was a flat 21%, but that is going to be changed to either 28% flat, or there may be a slab, which is basically 15% on up to $100,000 or $400,000, and then additional amount. And also there are a lot of other changes that are being discussed on the business side, like the qualified business income deduction, the depreciation. They are talking about removing the whole like-kind exchange or 1031 exchange. When you sell your real estate, you can invest that money to buy another real estate and not pay taxes ever till you sell the second property, right? That they are thinking of taking it away, or they are thinking of limiting it to those who make $500,000 or less. So a lot of changes coming up. On the estate tax side, estate tax is a tax that somebody has to pay when they pass away. So when they die, the government takes 40% of your money if your money is in excess of $11.5 million. Wow. Right? So a lot of people are not aware of this, particularly the NRIs, because they are always thinking about income tax, and nobody who are young, they think about estate tax, because we all feel we'll live forever, right? So that's how our energy is as immigrant Indians in this country. We are so focused on our ambition and career and family. But one thing to be kept in mind is estate tax and probate. Having a living trust, a will is very, very important. We are seeing a lot of NRIs, unfortunately passing away to COVID or accidents and things like that. So having a proper estate plan is important, not only to save estate tax, which is a long-term thing, but immediate purpose of, to protecting themselves. So that's very important, having a simple estate plan. So this estate tax limit of 11.5%, President Biden is thinking of bringing it down to anywhere between 3.5 and 5.5. That means if somebody passes away and their income is above $3.5 million, anything above that, you end up paying 40% to the government. So this is over and above income tax. This is not income tax. This is estate tax. So President Trump increased it from 5.5, which was President Obama's number, to 11.5. Now this number, President Biden is thinking of bringing it back to 3.5 or 5.5. Most probably it will be somewhere in between that or 5.5, bringing it back to President Obama's number. But this will severely impact because, over the last 10 years, people have made a lot of money and people are looking at paying this at the time of death. So it's better to use this $11.5 million limit that you have right now. IRS has very clearly said, if you take advantage of this $11.5 million today by gifting it away to somebody or by putting it in a trust, then you are good on that $11.5 million. Even if it comes down, you are not affected. There won't be anything called as clawback. IRS is not going to say, hey, now the law has changed. It's no more 11.5, it's 3.5. So return all your previous gifts back. Because one individual can gift up to $15,000 per person. So you can give per year. Yeah, you can gift me 15, I can give you 15. Like that, people can gift each other only 15. Anything more than that, if the gift, that goes against their $11.5 million threshold. Right? If you give me $100,000, $85,000 gets reduced from your $11.5 million. So that is how the IRS keeps a check. That's like a clock. It keeps going down. So people in this country keep gifting. Some of our friends, Indian friends, don't consider gift as a gift. They don't understand the law. So, but it is a law to record a gift which is above $15,000. One has to file a gift tax return if they give more than $15,000 to a friend or a family member or anybody that they want to give a gift to. So these are very high level highlights, Praveen. The change in the law is huge, enormous. But I think right now everybody is trying to figure out what is going to happen. We are all reading on a day-to-day basis, trying to digest the things, figuring out what is fair, what is not so fair, and what may happen, what may not happen. So right now it's a big question mark, what is finally going to happen. But one thing is very clear, tax is going to go up because the deficit of this country is very high and somebody has to pay for it. And we are the ones who are going to pay for it. Otherwise, the Social Security Fund is going to go zero very soon. By 2034, I think that's going to get exhausted. So President Biden has a lot of responsibility on him to fill that up, make the budget deficit smaller. Somebody has to do it, so I think he is going to do it, and that's going to impact all of us.
Great insight, Sudhir. So overall, there is no good news for individual, for corporates, for all estate planning. Everywhere you could see that there is going to be a tax increase in Biden's administration.
So the good news is that you are bringing people like me on TV and having people know that we exist, right? And we do understand how to plan for it, right? So now now it's just a bill. It's still not law. So this is the right time to think about estate tax. Those who have more than $11.5 million, think about talking to somebody like myself or your neighborhood CPA or your tax attorney or your estate attorney and figure out how to take advantage of the current market situation. I exited out of the stock market 2 weeks back because September is usually historically a down month. Now, whether it is my luck or fortune, I don't know. But the September 13 deadline came into this bill. So anything before that is long-term capital gain at 20%. Anything after that is higher tax rate. So that was kind of I felt good that I did this for my clients. So there are a lot of those kind of steps one can take, right? And a lot of steps one can take after the change also. So it's in this country, Praveen, you are successful if you have the best doctor, lawyer, and your CPA next to you. Absolutely. You can only be successful if you have these three people next to you. Otherwise, you may be successful, but not super successful, or your success may go down to not being so successful if you don't have these three.
That's true. You have rightly said these three people are very, very essential in our day-to-day life.
Yeah.
But most of the time we are all interacted with doctors and CPS very little, but no one want to go to the attorneys until and until it is required. So from our community, I feel that it is very less related to attorneys, especially from the crimes or any other aspects. But I would say definitely, as you said, all the NRI friends, so definitely hearing this to Sudhir, that the taxes are changed during this Biden administration. So please do reach out to us if you have any questions on the taxation or the estate planning or any of your corporate related queries. Please do reach out to me or Sudhir. We can help you in all the ways.